Welcome back. So we finally got the CPI for the month of May, and it looks like inflation is out of control. We are looking at 8.6% inflation in the US, and the crypto market also decided to take a nap with Bitcoin down on the 24-hour 3%, which isn't too bad. We're going to look at the chart we always do, exchange reserves. Who is buying? And just because I only pull up this chart in particular that correlates to Bitcoin, this does not mean that all of the other valuable cryptocurrencies or crypto assets are not flying off the shelves themselves. So for those who do not know what this chart is, it is the exchange reserves of every exchange that holds Bitcoin in particular. And the reason why I use Bitcoin is because it is basically the proxy for the whole market. If Bitcoin goes up, a lot of other coins go up. If Bitcoin goes down, then it's bad news for your project. So the white line is the underlying price of the asset, and the dark line is the metric we are trying to evaluate, which is the exchange reserves. And we can see the trend is still holding true. There is no relief with people buying Bitcoin and taking it off exchanges. Every day, people are waking up, entrepreneurs are realizing the value proposition of the crypto space, whether that's Bitcoin, Quant, XRP, Ethereum, but with this bear market, it is not holding these industrial sized investors. We can also see on this chart here, which is the Bitcoin short-term holder chart, and it basically gains an index of 155 days, excluding the first hour. And what this chart tells you is every holder within a 155-day period, are they selling in the positive or are they selling in the negative, a profit or a loss? And that value would be represented as a 1, being neutral. So if it's below 1, people are selling at a loss. And these are all short-term holders. If it is above 1, then we have our short-term holders taking profits off the table. And I hope you guys are not selling at a loss at this point in time. If you don't have any leverage, if you don't have any need for the money that you have invested in the market, I think it would be wise to leave it. Now, I cannot give you financial advice, but every time in the crypto asset space's history, dips like these where we see all-time lows, maximum fear, and basically enterprise size buying under the table, it has been a great buying opportunity for the retail investor in the future. That is basically all for this chart. I just wanted you to see another valuable chart that this website has, and it is brought to you by CryptoQuant.com. All right, let's get to the topic at hand. Here we are. Loomis Gillibrand introduced landmark legislation to create regulatory framework for digital assets. And if nobody else said it, I'm going to say it. It's about time. We have dealt with the SEC trying to regulate by enforcement, which is throwing lawsuits at a numerous amount of crypto projects, which they are still in one with XRP. Who knows what will happen in that one, because if this bill does pass and they do determine what is a commodity, what is a security in the crypto space, new laws cannot be applied retroactively. So that means that it will not change the outcome of the case. They still have to deal with what happened back in 2017. And I believe now that we have at least something to look at, we can see what those capable of pushing legislation for this space are thinking about. What is a commodity? What is a security? So we can better determine where we put our money and therefore conduct better research and be successful. I also think with a few points in here, you can definitely see who the winners are in this space, who will go by unscathed, and who will get hung up by the SEC or the CFTC, which those names are mentioned in this bill to handle separate parts of regulating the digital asset space. Let's get to the topics in the bill. And here it is. Now, I believe this bill was approximately 9 pages, but I went through the bill and highlighted some things I definitely wanted to point out so we can see going forward, are the projects we are invested in, are they safe, or are they going to get stepped on by the regulation when this passes, or if it passes? First up, we have the minimus exclusion, which is basically a go-ahead for investors taxpayers to spend a maximum of $200 per transaction for digital assets. which encourages payment processors in the crypto space to continue to innovate, and it also makes the taxpayer or the investor a little bit more comfortable with spending their crypto. Now, I've let you guys know how I feel about spending my crypto, which is a no way, not in any time soon I will be spending my crypto, but there are some people who like to spend their crypto, so that is good for them. Next up, we have the trading safe harbor for non-US persons, and this basically extends the trading safety net for non-US citizens. Let me try to highlight it right here. Yeah, the safe harbors for securities and commodities trading activity made by non-US citizens, which is good because now people who are coming into the United States or they're buying from a broker in the United States, they have a little bit of cover. Next up, we have decentralized autonomous organizations. Now, this one I was really anxious to see how they're thinking about approaching the decentralized organizations. Now, here they say DAOs are required to be properly incorporated or organized under the laws of a jurisdiction as a decentralized autonomous organization, which may include an LLC, corporation, partnership, foundation, cooperative, or similar organization. So with that being said, it looks like the DAOs are going to have to pledge to a specific city, a specific state. It doesn't say anything in here about being a hard office, which the US loves to have. I remember when Binance didn't have an office space, a hard building to operate out of, they just flew everywhere and pulled up their laptops to conduct business. And the US came after them and said, hey, we need somewhere to send these letters to because we have questions. And in the end, Binance complied and people held hands and people cried. All right, next up, we have digital asset lending agreements. And this basically just confirms that lending your crypto is not a taxable event as it was before. There are some laws that people just abided by anyway because it really didn't make sense. But it's good that they reconfirmed it here in this proposal. Next up, we have retirement investing in digital assets. Now, this calls on the government agency that goes by the name of the Government Accountability Office to conduct an analysis of the potential opportunities and risks of retirement funds, pension funds, investing in digital assets, and report to the Congress. And this will basically be the safety net for big hedge funds, and I mean the hedge funds worth millions, worth billions of dollars, to keep their eye on the crypto space. And once they get the go-ahead by this government agency, the GAO, I assume that money will flood into whichever project satisfies their needs, because everyone wants to participate in the greatest performing assets of all time. Next up, we have digital asset mining and staking. And this declares that digital assets obtained from mining or staking activities do not form part of a taxpayer's gross income until the disposition of those assets. So if I am not mistaken, you were not taxed initially until the disposition of those assets. So there are still some things in here that needed to be broken down for the layman like myself, but overall we can get the concept and see what they are going for here. And next up, which I think is the most important point of this bill, what is a commodity? What is a security? Now here the first line says, for the first time, this bill makes a clear distinction between digital assets that are commodities or securities. Now, for those of you who do not know what the Howey test is, I believe the Howey test was created in the 1930s, and they are still trying to apply the Howey, well, they used to, trying to apply the Howey test to the current digital asset space. 1930, 2022. All right, let's read on. Digital assets which are not fully decentralized and which benefit from entrepreneurial and managerial efforts that determine the value of the assets, but do not represent securities because they are not debt or equity, or do not create rights to profits, liquidation preferences, or other financial interests in a business entity, which is considered an ancillary asset. These will be required to furnish disclosures with the SEC twice a year. Now, the only problem I have with this is, are they going to specifically just define decentralization as it is in the dictionary? Or does it apply to one node, two node? We have a new project that has no nodes, or they are the only node that is on the network. Are they considered decentralized? As long as they have it in their white paper and that's what they intend to be, I guess this extends to them as well. And if that's the case, then a lot of the cryptocurrencies in the asset space are commodities. But another thing that just happened is that the person who actually proposed this bill, which is Senator Loomis and Senator Gillibrand, turned around, I think a few days later, to say that most projects in the crypto asset space are securities. Now, it just doesn't make sense to me, because you say this portion right here, right? Digital assets that are not fully decentralized, which benefit blah, 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 are considered ancillary assets, which are then determined as commodities. What's the haps? We need further clarity. I'm glad we at least got to this step where we can say, hey, we've created a new term, and a basket of these currencies that consider themselves decentralized fall into this basket, which is now called ancillary assets. And next we have the definitions portion of this bill, which I don't think there is much more that I really wanted to point out in this bill, but there's just a few things I wanted to cover just to clear things up, or things that are potentially going to be cleared up in the future if this bill goes through. So they're going to be looking to add the language of the crypto space, like digital asset or digital asset exchange, to the definitions contained in the Commodities Exchange Act, which is good. And you can also see where they grant the CFTC jurisdiction over the ancillary assets. Normalizing the language that is typically used in the crypto space is very good. It's very positive for adoption, because people who come in, if they see it is a part of law, it's just something they would be more comfortable with seeing, rather than a DAO or something like that, which somebody wouldn't know what that means. They would be very reluctant to even pay any attention to it. And next we have digital asset exchanges. This creates a pathway for digital assets exchanges to register with the CFTC, since they are not dealing with securities, they're dealing commodities, to conduct trading activities. So this is positive for the exchanges in terms that the traditional financial system will not try to elbow them out of this new asset class. They will let them stay, and they will allow them to register and continue to deal in the commodities that they are listing. And towards the bottom, we have payment stablecoins. So it looks like stablecoins are not going to be excluded from the future. I was very skeptical to see stablecoins stick around after what happened with UST and a lot of the accusations that have been brought towards USDT. A lot of people do not trust stablecoins, but they have been pretty helpful. I know personally, for my case, I have been using stablecoins since the first day they came out. Early in the crypto space, there were no stablecoins. So for me to kind of balance out my portfolio and secure profits without really literally leaving the crypto space, I would have to put it all back in the US dollar, which was very inconvenient for me. So I was just glad that stablecoins were there to take the brunt of my portfolio stability. I just hope they don't try to bring the CBDCs into this as well. Everyone who's in the crypto space knows that CBDCs are not it. It's not good. I don't see any future where CBDCs could work well with the crypto natives and traditional finance at the same time. Moving on to the last two sections, which I actually do find this quite important. So the top one, right to individual management of digital assets. So basically what this points out and what it underlines is the fact that you still have the right to participate in the custody of your own funds, which has been an ideology that has came due to the crypto space. So I'm glad they left that, or not left that, but included that in there so people can continue to manage their own crypto assets. And now down to the digital yuan on government devices. So this is basically allowing the digital currency of China to operate within the US. And I find this really huge. And this is not my expertise, but a lot of the documentaries that I follow, a lot of the economists that I pay attention to are saying, due to the fact that we had so many sanctions against Russia, the dollar is losing its reserve currency title. Now, in the future, what do I think is going to happen with the US dollar not maintaining its reserve currency status? I think powerful digital currencies who had the opportunity to move first, such as countries like China, are definitely going to hold a significant amount of global remittance when it comes to trading, natural resources, and things like that. And we have already seen backdoor deals between Russia and China because China doesn't want anything to do with it. They think whatever Russia did was cool. And I just think the USD is going to have a hard time trying to maintain its trust, as a lot of people did not like the way the US and their allies sanctioned Russia. And they think if they ever did something that the US did not like, or their allies as a whole, they could also too be sanctioned and be kicked out of the financial system. And that is basically it for this bill. Now, I like a lot of the language that is included in the bill because it gives clarity on the things we have been using for years now, which is digital assets, decentralization. Do we have a right to maintain our decentralized assets? And can we continue to operate and innovate alongside the traditional asset class? Or most importantly, it allows the traditional asset class to come into the crypto space and build from there. I also like that the fact that we have a word for the decentralized assets and the things that I'm currently invested in. I don't feel so alienated anymore. I think everything that I've invested in and I conducted research on, I think I am safe from the crosshairs from further litigation from the SEC, which I find entirely reckless. It's horrible. I don't know how long it took for these senators to create this bill, but in the 5 or 6 years that the SEC has been paying attention to the crypto asset space, they have provided no bills, no relief, no adoption, only litigation. They have sued Ripple, they have sued Kick, they have sued Library, and these are all previous crypto projects that fell under the foot of the US SEC. And Ripple's case is still ongoing. So that is all, ladies and gentlemen. Thank you for listening. Thank you for watching. If there is anything you want me to expand on, go ahead and put it down in the comments. I love responding to everyone's questions and concerns, and I'm just glad I am here to make the crypto space a little bit less confusing. Take care all, and I will catch you on